Hi everyone, your San Francisco Realtor here. October's market feels different. Rates might actually fall, inventory is still tight, and a few neighborhoods are red hot again. Let's dig into what's really driving San Francisco real estate right now. Before we get into San Francisco's real estate, let's look at the economic indicators that shape it. By now, you've heard that the Fed made its first rate cut in September, and another one could be on deck before the end of the year. That's a big shift after nearly 2 years of holding steady, and it's exactly what the market's been waiting for. Inflation is sitting at around 2.9%, and unemployment's holding near 4.3%. A mix that says the economy is cooling just enough without losing its footing. When those two numbers move in sync, inflation down, jobs stable, confidence starts to return. That's when we begin to feel it in real estate. At today's rate of 6.4%, an $800,000 loan runs at about $5,000 for principal and interest. Add taxes and insurance, and the full payment lands closer to $6,100 a month. If we drop the rate by just 1 point, that falls to roughly $5,600 a month, a $500 savings every month, or about $6,000 a year. That kind of shift can easily add $75,000 in purchasing power. And meanwhile, the stock market's on a tear. The S&P 500 is up 27%, Dow 19%, and Nasdaq is up 30% year over year. This is giving buyers a little more confidence to act. And on the rental side, a 2-bedroom in San Francisco is still averaging about $5,000 a month, about 150% above the national average. Whew! And if we zoom out, the rents have nearly tripled since 1993. Steady demand, limited supply, same story. So with rates easing, confidence improving, and supply still tight, the next few months could get very interesting for San Francisco real estate. So let's take a look at how that is already showing up in last month's numbers. Last month, roughly 320 homes closed citywide, about the same as August, showing steady momentum heading into fall. Zooming in, single-family homes held near 120 sales. Condos climbed to about 170, and TACs landed around 20. That's small movement month to month, but all three segments are ahead of last year's pace. Proof that even with higher rates, more buyers are back in the game than a year ago. Citywide inventory held tight at just under 900 active listings, still well below typical fall levels and keeping pressure on prices. Zooming in, single-family homes make up the smallest share of available inventory, while condos dominate what's on the market. That imbalance continues to shape buyers' behavior. Single-family homes move fast, while condos offer a bit more breathing room and choice. New listings picked up slightly in September, as more sellers tested the market after the Fed's rate cut. Citywide, we saw around 650 new listings, a modest month-over-month bump, but still well below typical fall levels. Zooming in, single-family homes rose about 19% from August, condos up around 12%, and TACs roughly flat. That small uptick shows some renewed seller confidence, but overall, supply remains tight enough to keep competition alive heading into Q4. Pending sales jumped in September, marking one of the biggest increases we've seen all year. Citywide, activity surged roughly 60 to 70% month over month, as buyers began reacting to the Fed's September cut. Zooming in, single-family pendings climbed to about 200 homes, up more than 70%. Condos followed close behind, up about 60%. It's the clearest sign yet that buyers' confidence is returning, and momentum is building as we head deeper into fall. And here it is, the headline from my October's polls. In September, single-family homes jumped to just over 2.1 million, up nearly 27% from last year, and one of the highest September medians San Francisco has ever seen. Instead of cooling after summer, prices spiked, driven by tight supply, the Fed's rate cut, and renewed demand across neighborhoods like Noe Valley and the Marina. Even without those 3.5 million plus sales, the median still sits near 2 million, proof that this rebound runs broad and deep. That wraps up my October's pulse. But if you want to see where the market's headed next, check out my quarterly trends report, where I break it down into the bigger picture and reveal the hottest neighborhoods in the city.
So, after years of swings, the San Francisco market's balanced again. Prices steady, inventory tight, confidence returning. I'm Paulo Serna. Thanks for watching your October Pulse on the market, and let's see you next month.